Hello and welcome back to MoneyMasterMind. Today we are exploring the Roth IRA and Traditional IRA and which option is better for you. Now let's get started, but first, if you enjoy this content or anything related to investing, be sure to like and subscribe for more videos like this. Now let's get straight into it. As we begin our journey of financial education, we invite you to join us in exploring one of the most critical aspects of your future: retirement planning. Picture yourself enjoying your golden years, worry-free and financially secure. But to make this vision a reality, you need to make informed decisions today. In today's video, we'll explore the world of retirement accounts, specifically comparing two popular options: Roth IRA and Traditional IRA. These investment vehicles serve as the foundation of retirement planning for millions of Americans, offering distinct advantages and considerations. Before we dive in, let's lay down the groundwork. A Roth IRA and a Traditional IRA both provide avenues for you to save for retirement, but they operate under different tax structures. Understanding these differences is crucial for optimizing your retirement strategy. The Traditional IRA offers tax-deferred growth, meaning your contributions may be tax-deductible now, but you'll pay taxes on withdrawals in retirement. On the other hand, the Roth IRA operates on a post-tax basis, allowing you to make contributions with after-tax dollars and enjoy tax-free withdrawals during retirement. Throughout this video, we'll explore the functions of each retirement account, explaining their pros and cons to help you make an informed decision about which option aligns best with your financial goals. So sit back, relax, and let's navigate the complex yet rewarding world of retirement planning together. Don't forget to grab a notebook and pen, because by the end of this video, you'll be equipped with the knowledge to take charge of your financial future. Let's get started. In the world of retirement planning, Roth IRA and Traditional IRA stand as excellent options, each offering distinct advantages and considerations. Let's begin our exploration by understanding the core concepts of these retirement accounts. A Roth IRA is a retirement savings account that allows individuals to contribute after-tax income, meaning you've already paid taxes on the money you contribute. The key benefit of a Roth IRA lies in its tax treatment upon withdrawal during retirement. Any earnings and qualified withdrawals from a Roth IRA are entirely tax-free, providing a valuable hedge against potential future tax increases. Also, Roth IRAs do not have required minimum distributions, allowing your investments to grow tax-free for as long as you choose. In contrast, a Traditional IRA operates on a tax-deferred basis. Contributions to a Traditional IRA may be tax-deductible, reducing your taxable income for the year in which you contribute. However, you'll pay taxes on both your contributions and any investment gains when you withdraw funds during retirement. Traditional IRAs are subject to RMDs, requiring that you begin withdrawing a minimum amount each year after reaching age 72, potentially impacting your retirement income strategy. Now let's dive into the tax advantages and differences between these two retirement accounts. Roth IRAs offer tax-free withdrawals in retirement, making them an attractive option for individuals who anticipate being in a higher tax bracket during retirement or who desire flexibility in managing their tax liabilities. Traditional IRAs, on the other hand, provide immediate tax deductions for contributions, which can lower your taxable income in the present, but withdrawals are taxed as ordinary income in retirement. That is why understanding contribution limits and eligibility criteria is essential for maximizing the benefits of each IRA type. As of 2024, individuals under age 50 can contribute up to $6,000 annually to either a Roth or Traditional IRA, with an additional catch-up contribution of $1,000 for those aged 50 and older. However, income limits apply to Roth IRA eligibility, with contributions phased out for higher income earners. In summary, Roth IRAs and Traditional IRAs offer distinct tax advantages and considerations, making them valuable tools for retirement planning. By understanding the differences between these two retirement accounts and their respective contribution limits and eligibility criteria, you can make informed decisions tailored to your financial goals and circumstances. Traditional IRAs have long been a popular choice for retirement savings, offering immediate tax benefits and the potential for financial security in retirement. However, like any investment vehicle, they come with both advantages and drawbacks that require careful consideration. One of the primary advantages of a traditional IRA is the ability to deduct contributions from your taxable income in the year you make them. This immediate tax benefit can lower your overall tax liability, providing valuable savings that can be reinvested to further grow your retirement nest egg. Traditional IRAs are particularly advantageous for individuals who expect to be in a lower tax bracket during retirement compared to their current working years. By deferring taxes until retirement when your income may be lower, you can potentially pay less in taxes on your withdrawals. One drawback to a traditional IRA are tax-deductible contributions. For example, withdrawals during retirement are subject to ordinary income tax rates. This means that you'll owe taxes on both your original contributions and any investment gains when you begin accessing your retirement funds, potentially reducing the overall value of your savings. Another significant drawback of traditional IRAs is the requirement to take minimum distributions from your account once you reach age 72. These RMDs are calculated based on your life expectancy and the value of your IRA, and failing to withdraw the required amount can result in costly penalties from the IRS. Navigating the pros and cons of a traditional IRA requires careful consideration of your current financial situation, future retirement goals, and anticipated tax implications. While the immediate tax benefits and potential for lower tax brackets in retirement make traditional IRAs an attractive option for many investors, it's essential to weigh these advantages against the tax liabilities and mandatory distributions that come with this retirement account. Ultimately, choosing the right investment vehicle depends on your individual circumstances and long-term financial objectives. Roth IRAs have gained popularity as a powerful retirement savings tool, offering unique benefits that can improve your financial security in retirement. However, like any investment option, they come with their own set of advantages and considerations that are important to understand. Perhaps the most significant advantage of a Roth IRA is the ability to withdraw contributions and earnings tax-free during retirement. Since contributions are made with after-tax dollars, you won't owe any taxes on qualified withdrawals, providing valuable tax diversification and flexibility in managing your retirement income. Unlike traditional IRAs, Roth IRAs are not subject to mandatory minimum distributions after reaching a certain age. This means you can maintain control over your retirement savings and let your investments continue to grow tax-free for as long as you choose, offering greater flexibility in estate planning and retirement income strategies. Roth IRAs offer more flexibility than traditional IRAs when it comes to contributions. You can continue to contribute to a Roth IRA at any age, as long as you have earned income, without being subject to age limits or mandatory distributions. This flexibility allows you to maximize your retirement savings potential and adjust your contributions based on your financial situation. Unlike traditional IRAs, contributions to a Roth IRA are made with after-tax dollars, meaning you don't receive an immediate tax deduction for your contributions. While this may initially seem like a disadvantage, the potential for tax-free withdrawals in retirement can outweigh the lack of immediate tax benefits, especially for individuals expecting to be in a higher tax bracket during retirement. Roth IRAs have income limits that determine eligibility for contributions. As of 2024, single filers with a modified adjusted gross income above $144,000 and married couples filing jointly with a MAGI above $214,000 may not be eligible to contribute to a Roth IRA directly. However, strategies such as backdoor Roth conversions can still provide options for high-income earners to access the benefits of a Roth IRA. Understanding the pros and cons of a Roth IRA is crucial for making informed decisions about your retirement savings strategy. While tax-free withdrawals, no RMDs, and contribution flexibility make Roth IRAs an attractive option for many investors, it's essential to consider factors such as eligibility requirements and the lack of immediate tax deductions when evaluating whether a Roth IRA aligns with your financial goals and circumstances. When it comes to planning for retirement, a Roth IRA offers a compelling array of benefits that make it a superior investment choice for many individuals. Let's explore why a Roth IRA stands out as a preferred option for securing your financial future. Perhaps the most significant advantage of a Roth IRA is the ability to enjoy tax-free withdrawals during retirement. Unlike traditional IRAs, where withdrawals are subject to income tax, qualified distributions from a Roth IRA are entirely tax-free. This tax-free income can significantly enhance your financial security in retirement, allowing you to maintain a higher standard of living without the burden of tax obligations. Roth IRAs offer unmatched flexibility and control over withdrawals, providing you with greater autonomy in managing your retirement income. Since contributions have already been taxed, you can withdraw your contributions at any time without penalties or taxes, offering valuable liquidity in times of need. Also, Roth IRAs do not have required minimum distributions, allowing you to maintain control over your assets and potentially pass on a tax-free inheritance to your children or spouse. With ongoing changes in tax legislation and the possibility of higher tax rates in the future, a Roth IRA serves as a powerful hedge against potential tax increases. By paying taxes on contributions now, you effectively lock in your tax rate and shield your retirement savings from future taxation. Despite its numerous benefits, Roth IRAs are often misunderstood, leading to misconceptions about eligibility and contribution limits. It's essential to clarify that Roth IRAs are available to individuals of all income levels, although contribution limits and eligibility criteria may apply. Strategies such as backdoor Roth conversions provide options for high-income earners to access the benefits of a Roth IRA. In summary, a Roth IRA offers unique advantages in terms of tax-free withdrawals, flexibility in managing retirement income, and protection against future tax risks. By understanding the unique benefits of a Roth IRA and addressing common misconceptions, you can make informed decisions that maximize your retirement savings potential and secure your financial future. In conclusion, we've explored the key differences between Roth IRAs and traditional IRAs, explaining the advantages and considerations of each retirement account. Roth IRAs offer tax-free withdrawals in retirement, flexibility in managing your retirement income, and protection against potential future tax increases. On the other hand, traditional IRAs provide immediate tax deductions, but withdrawals are taxed in retirement, and RMDs may impact your retirement income strategy. As you plan for your retirement, it's crucial to evaluate your own financial situation and goals carefully. Consider factors such as your current tax bracket, anticipated tax rates in retirement, and long-term investment objectives. Consulting with a financial advisor can provide valuable insights and guidance tailored to your individual needs, helping you develop a comprehensive retirement strategy that aligns with your goals and priorities. We hope this video has equipped you with the knowledge to make informed decisions about your retirement savings. Remember, the choices you make today can have a significant impact on your financial future, so take the time to assess your options and plan accordingly. By staying informed and engaged, you can take control of your financial future and embark on the path to a secure and prosperous retirement. Thanks for watching Money Mastermind. If you enjoyed this video, be sure to check out our other videos for more investing tips. Don't forget to like and subscribe to stay updated on all our latest videos, and we'll see you in the next one.